The $1,000,000 question, are mortgage interest rates going to fall in 2024? In this video, not only am I going to tell you if they're going to fall, when they're going to fall, I'm going to show you the proof, right? I'm going to show you a graph that's going to show you exactly the reason why rates aren't going to do what you expect them to do, but they're going to do what's good for you and what's good for the real estate market. Stay tuned. All right, straight into it. In this video, I'm going to talk about mortgage interest rates with the core PCE number, another fancy word for inflation, coming in this week. We've got more data about what's going to happen in the future with inflation, which I promise you has a direct correlation to mortgage interest rates, has a direct correlation with when and how much the Fed can cut the Fed funds rate, which again, ties back to mortgage interest rates. So without complicating it too much, I'm going to show you a chart that's going to show you the estimates for the monthly reading for core inflation. What this is going to show you is that our path to 2% inflation that the Fed is targeting is going to be slower than most people think. Mortgage rates coming down is going to happen slower than most people think. So I'll give you a little hint before I dive into this chart. Anybody who's looking for a mortgage rate with a 5 handle in front of it, I wouldn't expect to see that in 2024. And honestly, that's a good thing. All right, let me show you this chart. Let me talk about the inflation number that's probably going to come out the day this video releases, which is March 29th. This is expectations for inflation and the Fed rate cut, the Fed meeting dates over here on the right. So let me explain this chart to you real quick. We've got February reading for core inflation. This February number gets released March 29th, probably the same day that I released this video. I'm recording it a few days prior. You take that 0.3 that we get for February, it replaces a 0.36 from last year, and core PCE year over year goes down to 2.79. Currently, I think that sits at 2.85%. Now, if we estimate March, April, May, June, July, August, September, all with 0.2 monthly readings, which when they replace the 0.34s and the 0.31s and the 0.29s, this starts to pull year over year core inflation down to 265, down to 254, down to 249. What you'll notice is that you can't have one good reading, even 2 or 3 good readings for inflation and expect it to come down fast and furious to their 2% target. Remember, the Fed said 2% is their target inflation number. So with all of this data and looking at it, you could make the case that 3 rate cuts, which the Fed has talked about, might not even be justified if numbers start to look like this, right? After I saw this data, I thought to myself, you know what? I'm not upset that Jerome Powell has kind of slowed in his rush to cut the Fed funds rate. Sure, we're at 5.25 to 5.5, and everyone's like, holy moly, like inflation's under control. Look, it's headed down. Let's hurry up and cut. What he may or may not have said in so many words is like, look, it's going to take a while to get inflation down to this. And so you look at this, we're going to have these 2 readings. And then you look to the right, the corresponding Fed meetings, which will happen after these readings have been released. So we'll have February coming out March 29th. Then we'll have end of April, March's number coming out. So we're going to have 2 readings. May or may not be, 0.3 and 0.2, and may or may not be 2.65 year over year before the May 1st meeting. Unlikely we see a Fed funds rate being cut. Unlikely that pushes down mortgage interest rates. Then we've only got 1 reading before the June Fed meeting, and then a couple more before the July meeting. What all of this should say to you if you're somebody who looks at interest rates, cares about interest rates, is, you know what? If I'm getting a mortgage today, I should be structuring it in a way where I expect to probably be in it for 12 to 18 months. Hence, a lot of the advice I'm giving current clients is we're planning to refinance. And trust me, when I tell you, I think rates will get in the fives, mid fives, maybe even low fives by the end of 25. But it's not going to be by the end of 24. It's certainly not going to be in the next 6 months. It's going to be a little bit longer. So structure the mortgage accordingly. Maybe you pay a little bit to have a rate that's comfortable. It gives you a comfortable monthly payment in case you're in that mortgage for 24 or 36 months. Don't pay so much that if you refinance it in 12 or 18 months, you're upset about the points you paid up front. Consider a 1.0 buy down where you might go 5.99 in year 1 and then 6.99 in years 2 through 30. These are the type of strategies and structures that if you work with a mortgage advisor who knows what they're talking about, they're structuring them based on not just you, the client, and your goals and your plans for how long you're going to stay in the house, but based on current economic conditions, the trend for interest rates, how long you're likely to stay in this specific mortgage. Those are the things you need to consider. So if you want to connect with my team, you want to talk about structuring a mortgage you're currently looking at, go to greatmortgagebroker.com. We're more than happy to help. We're in 48 states. Again, greatmortgagebroker.com. Hopefully this was helpful. Leave your comments down below. Tell me if you agree, disagree, why you think mortgage interest rates might come down. There might be other factors besides this, right? It might be like, hey, there's economic factors. And if, we get runaway unemployment, maybe that pushes the Fed, right? Because full employment is another one of their initiatives, another one of their things, right? Inflation under control and full employment. So you could be right. Leave your comments down below. Till next time, we gonna see.